Hello everyone. Before we get going, first of all, wishing everyone a blessed Ram Navami, and I'm sure you're all going to come out with flying colors. So, what we're going to see in this video is Ind AS 37 and Ind AS 12 must-do questions. Let's quickly check it out. What are the things you should keep in mind, and what are the key terms you should remember? So, first one is U Limited is a large conglomerate with a number of subsidiaries. It is preparing CFS as on 31st March 2022 as per the notified Ind AS. The FS are due to be approved for issue on 15th May 2022. So before we proceed with this question, just want to tell you one quick thing. When you see big questions like this, you should know what are the values you should pick it up. Because in the limited time, for example, your question paper might contain 18 to 20 pages. You should be able to read it within 4 to 5 minutes. Because time management is very essential. So keep that thing in mind. And immediately, for example, go straight to the data, like some of the details relating to G Limited. What it is given is it is estimated G Limited has to pay rupees 50 lakhs as termination payments, and who would remain within the group. Relocation cost rupees 60 lakhs. Relocation cost rupees 60 lakhs. Relocation cost rupees 60 lakhs. So that is the reason why I am repeating it. Keep this thing, whether relocation should be considered or not for provision. You got to tell. So as per the latest estimates on 15th May 2022, the total relocation cost is rupees 63 lakhs. G Limited has taken property on lease. The present value of future lease rentals is 430 lakhs. And G Limited made a payment to the lessor of rupees 410 lakhs. Recall, whatever you know, whatever you prepared relating to this, quickly recall. So determine the provision the company is required to make as per Ind AS 37. The loss after tax of G Limited for the year ended 31st March was 400 lakhs. G Limited made further operating losses totaling rupees 60 lakhs till 30th April 2022. There is another hidden standard in this which you should write in the exam. I know you are able to sense it. So in case we got it, do drop in the comments. Let's check it out whether you got that standard right. So Ind AS 37, discontinued operation. Here, what is the question? The summary is prepared and decided to discontinue the business from 30th April 2022. For teaching you the time management tricks, we did not read couple of para, but once you, for example, once you've seen the required values, your mind automatically picks this data. So don't have to worry about those things. So discontinued operation, it could be for two reasons: discontinued in the period or classified as held for sale at the year end. And restructuring includes sale or termination of line of business. This question is entirely on concepts of restructuring. So constructive obligation to restructuring arises when it arises. So entity has detailed formal plan for restructuring, and ஒரு பக்காவா பிளான் ரீஸ்ட்ரக்சர் பண்ணதுக்கு either newspaper or they have announced something, they have declared, and has raised valid expectation in those affected that it will carry out restructuring. இது பண்ணிதான் this will be done. By starting to implement the plan or announcing its main features to those affected by it. Restructuring provisions includes only direct expense that arises from restructuring. So those who mentioned the other standard, I hope you got it right. It is Ind AS 10, events that provide additional evidence of conditions at reporting date should be reflected in the financials. So company should make a provision of rupees 520 lakhs. Where did we see 520 lakhs? So cost of relocation would remain, and termination payments totaling for 520 lakhs. Termination payment is 520 lakhs. So for the termination payment, 520 lakhs provision should be made. Do we need to do anything for relocation cost? The relocation cost which I kept stressing 3 times. Read this. Restructuring provision should include only direct expense from the restructuring, which are those that are both necessarily entailed by the restructuring and not associated with the ongoing activities of the entity. A restructuring provision does not include such cost that is retraining or relocating the continuing staff, or marketing or investment in new systems and distribution networks. So relocation cost should not be accounted as provision. So should we do so? 520 lakhs is the answer. Answer is absolutely not. So next is lease should be the onerous contract. So how to make provision for onerous contract? Lower of cost of fulfilling it, any compensation or penalties arising from failure to fulfill it. So provision to be made for rupees 410 lakhs. So operating losses relating to future events that do not form closure events will not be accorded in the provision. So total provision should be made is rupees 930 lakhs. That is 520 plus 410 lakhs. I hope you found this question very useful. Lot of key terms and provisions and computations are there in it. So this is the base for Ind AS 37. I hope you got everything correct. Do watch it again and ensure you pocket entire Ind AS 37 in your mind. So moving on to the next standard, Ind AS 12 income taxes. The directors of H Limited wish to recognize a material deferred tax in relation to rupees 250 crore of unused trading losses which have been accumulated as at 31st March 2021. So H Limited has budgeted profits rupees 80 crore for 30th. For year end 31st March 2022, the directors have forecast the profits will grow by 20% each year. However, the market is currently depressed. So not only candidates, examination candidates are depressed, even marketing is depressed. So and sales are at a lower level for the first quarter of 2022. That they were for the same period in the previous 5 years. On extrapolating the sales order book, you know that improvement in trading result may occur after the next couple of years. However, this is not in line with the sales order book. So H Limited operating tax duration allows for trading houses to carry forward only for maximum of 2 years. Analyze whether deferred tax asset can be recognized in FS of H Limited for the year ended 31st March 2021. Fairly straightforward question. So let's quickly check. Tax base of asset is the amount which will be deductible against taxable economic benefits from recovering carrying amount of the asset. This is the key point. Carrying amount is 0 for unused trading losses since losses not yet been recognized in FS of H Limited. Given that losses can be carried for a maximum of 2 years, only in this case, director's contention to recognize DTA in relation to 50 crores is not correct because only up to 2 years it can be carried forward. Hence, conclusion is DTA of 250 crores cannot be recognized. So you got to write about tax base, then key terms economic benefit, then applicate interpretation of the question, then conclusion. That's it. You will get full 4 or 5 marks. So moving on to the last question of our discussion. On 1st April 2021, P Limited granted 1 crore share option worth rupees 4 crore fair value subject to 2-year vesting period. The income tax law permits a tax reduction at the excise rate of intrinsic value of options. The intrinsic value of the option as on 31st March 2022 was 1.6 crore and the 31st March 2023 was 4.6 crore. Increase in fair value of option on 31st March 2023 was not foreseeable as at 31st March 2022. The option were exercised at 31st March 2023. Give the accounting for the above transaction for deferred tax period for ending 31st March 2022 and 31st March 2023. Assume there are sufficient taxable profits in future against any deferred tax benefit. As such, tax rate is 30% applicable to P Limited. So on 31st March 2022, what are the things you can carrying amount of share-based payments is rupees 0 because we are in year 1. Tax base of share-based payments is rupees 1.6. How we got 1.6? It's given intrinsic value is 1.6. So the intrinsic value is 0.5. So that is rupees 8.8 crores. Then temporary benefit carrying amount is tax base carrying amount is 0. So tax base is 0.8. So 0.8 crore. DTA 0.8 crores and 30%. That is rupees 2.24 crores. Then pass the entry for this. DTA deferred taxes on account debit rupees 2.24 crores. To tax expense rupees 0.24 crores. So that's it. No. on 31st March 2023, option is exercised and current tax benefit will be available to entity on the basis of interest value of rupees 4.6 crore. So earlier recognized DTA will no longer be required now. So you have to close the entry. That is tax expense upon debit 0.24 crores to DTA rupees 0.24 crores. I hope you found this discussion very useful. Within 8 to 10 minutes, we were able to revise Ind AS 37 and Ind AS 12. Two very tricky standards, especially on the exam day morning, because you know suddenly you get a doubt whether relocation expense to be considered or what is the key term, whether tax benefit, tax base or economic benefits, all those things. So that's why to sort all this out, we discussed this elaborately. Hope you got it right. Best wishes and have a fantastic time ahead. And in case you require anything, do drop in the comments. Do share the channel with your friends as well. It will be very beneficial for everyone. So have a great day again.